Hello everyone, I'm Shivang Mehta. In this session, we are going to do a technical analysis of Tilak Ventures Limited right issue, which is coming on 28 Feb. Issue is at over 60% discount of current market price of the stock. So this is a great opportunity to make short-term gains, quick gains. So let's see the fundamentals and the technical details of this new financial stock. So Tilak Ventures Limited is a finance company to advance money to individuals, firms, or corporate body and to receive money on deposits or loans to carry business as financiaries. Thus, the company is mainly into business of financing, investment, and trading into shares, commodities, and bullion. Currently, the company is majorly into financing, investment, trading into shares, commodities, and bullion. It operates into business segments, finance and commodities markets. So as we can make out, this company is finance is in the sector of financial services. Let's look at the fundamentals of the company. Coming to the company's financials, so total asset of the company is around 300 crores. So we can make out this is a small micro cap company. Total income of the company is drastically fluctuating over the quarters. In 31st March 2021 ended quarter, company made 51 million, while in quarter ended 30 September 2021, company made just 2 million. Profit after tax of, is also quite volatile for the company, ranging from 2 to 15 million for the company. Right issue details. So issue will open on Feb 28 and close on March 15. Security name is Tilak Ventures Limited. Issue size is 9 crores. So this is a small cap. As you can know, you can make out that 9 crore shares will be issued and issue size amount is 48 crore. Issue price is 5 rupees per share, which is at 60% discount of the current market price of 14 of this share. Face value is of rupees 1. Market lot 1 per share. Terms of payment. So this is very important for the investors. So 50% of the issue price, that is 2.5 per rights equity share, shall be payable at the time of application, and the balance of 50% of the issue price, that is rupees 2.5 per right equity share, shall be payable in one or more subsequent calls as determined by the board from time to time. So this this might be a clicking point for the investors, since they have to do leveraging for investment. So they don't have to borrow whole amount rupees 5 per share. You can just invest 2.5 and wait for the calls for rest of the money. Entitlement: 3 right shares for every 4 fully equity shares held on the record date. So 3 is to 4 will be the ratio of issue of right issue. So bid of bid opens on 28, closes 15 March, record date is Feb 18. This is very important. So the shareholders of the company at depository on Feb 18 will be considered for the right issue. Dim date for allotment is March 28, and renunciation of rights entitlements will be March 8. Objective of this IPO: meet working capital requirements. Since company deals in financial services, so company often need finances for to raise money or to give out loans or to invest in stock opportunities to meet issue related expenses. In general corporate purposes are the other objective of this right issue. Stock performances. So as you can make out, performance of the stock has been quite flat in last 5 years, but a strong movement has been seen in the end of 2021, where stock had climbed from rupees 1 to rupees 14. So in last 5 years, stock has given over 1100% returns, but major returns has been in last 6 months. Market cap of the company is 332 crore and PE ratio is 896, which is quite which which cannot be justified considering the very low P ratio of peers in this industry. 52-week high has been 38. So as you can make out that how low stock is trading as compared to its 52-week high, and how volatile market has been over last 6 to 8 months. 52-week low has been rupees 1.36. So company Stock has also touched its face value in last 6 months, and the stock has been remained quite volatile. Technical indicators of moving average of the stock gives the action of buy considering the 33% sell and 67% buy advisable. Momentum oscillator and trend oscillators also point towards buy considering the distance of the stock from its 52-week high. Moving towards short-term stock performances, and short-term company has given negative returns in last 3 months. In last month, company has given negative returns of over 30%. In January 22, 7%, and December 2021, company has lost almost 50% of its market cap. While in last 1 year, if you see, company has given over 100% returns in few of the months. So as we can make out, the stock is highly volatile and depends upon the liquidity and sentiment of the market, and less has to be considered when it comes to the fundamentals of the stock. Coming to fundamentals, company's market cap is 317 crores, PE is 189, price to book ratio is 10, industry PE is 14. So as compared to industry PE, company is highly overvalued, and in future you can see stock moving down. So long term investment is not advisable in this stock. Return on equity of this stock has remained 5%, which is quite considerable compared to its peers. Book value of the stock is rupees 2. Peer comparison, as you can make out, Pyramid Enterprises, Power Finance Corporation, Indian Railway Finance Corporation are its small cap peers, which has given 5%, 2%, negative 2%, and positive 2% returns in last few years. So as you can make out, they are quite less volatile compared to the company which is coming up with the right issue. So this is also a negative point for the company. Coming to the shareholders pattern. So at this point, company has already diluted 42% of its shares, and company is not far away from diluting over 50% of its shares. So voting right might move from promoters to professionals, and future promoters might not be able to hold company or take strategic decisions for the company. So now the fundamental questions come up: should you invest, should you subscribe to this right issue or not? So considering fundamentals of the company, stock is highly overpriced and not suitable for long-term investing, but for short-term trading gains, aggressive investor can take bet on this right issue. And companies' fundamentals are not strong as compared to the industry peers, and companies highly overvalued considering the metrics of PE and other price to book metrics. Leveraging for subscription is not advisable and risky considering the fluctuations and volatility in the market at this point. Thank you.